Wonderful. Now go back to that premise of waiting for the market to open up. I abandoned buying strength because I learned that Larry Williams said that he wanted to understand how people could be a buyer below the opening price on big bullish days. And he was demanding that he see a 20% of the previous day's range be above the opening price for the S&P. And then he would be a buyer. To me, in hindsight, looking back at it, I discovered that I was many times buying on a 10 o'clock high, and then my stop loss that would be retracing down to a silver bullet that down today would be a new entry, or really a more sound entry if you didn't buy below the opening price. I would get stopped out there, and then what would happen? Think. I went long buying strength, and it retraces on me. My stop loss gets hit, or it scares me, and I close the trade. But it goes into what you understand now as the fair value gap, which is a silver bullet. What's price going to do? Take off. I'm not in it. I'm demoralized. I'm angry. I'm upset. So I learned from that. I said, okay, I'm not going to wait for that retracement. I'm going to buy it as it drops underneath the opening. If I think it's going to go up, I want to find out where we open, and I want to see it drop down. So all I would do is use a 15-minute time frame. And whatever the low was, it was real close to going left. Whatever the first 15-minute low was, I don't care if it was 2 handles. That was what I needed it to go below. Once it did that, then I started buying it. In the beginning, it did not work well. It was me going in and losing lots of money doing that. I would go in and I would condition myself to say, okay, I'm going to figure this out because he says he wishes he could learn this. I'm going to fucking learn how to do that. I'm going to learn how to do that. I'm not going to lose more money with something I can't replicate with him saying he's willing to do that. That was the biggest milestone in my development, by understanding that a mentor, like for all of you, you might have seen me do something, okay? And there's a lot of my students that are guilty of this. And I understand because I experienced it myself. When you have a hero that you look up to and you're trying to learn from, it doesn't need to be trading, it could be anything. And they can do something that you try very hard to emulate and try to do as close as you can to what they're able to do, and you fail, it builds a certain measure of animosity. It may not manifest itself vocally or in a manner where other people can see it, but internally you feel it and you wrestle with it. I was angry at Larry Williams because I felt like he was teaching something incomplete when he really wasn't. His stop loss allowed for a lot of gross retracement that I, as a trader, was unwilling to absorb, and I didn't have the money to absorb it. So I had to create something that was inspired as a challenge. I took it as a challenge. He said he couldn't. Well, shit. At that time, I couldn't make 10,000 become $1.2 million a year. I couldn't do that then. I can fucking do it next year, but that time I can't. So what am I going to do? I'm going to try to scratch the itch the best I can and start delving into an area where he said he can't do that. Okay. I'm going to try to do something that he said he can't, and I think he's Mr. Everything in trading. So I'm going to devote my time into that. And I lost a lot of money trying to figure out a system of determining, how far will it drop down? How far will it go down? And then I started looking for, more than single swing lows, and I'd start seeing the 2 relative equal lows. And then I would look at the overnight Globex low. And then there would be this little tiny segment of price action where it was 1 candle. Buy side imbalance, sell side inefficiency. Resting right below relative equal lows. That was my banger. That was the one I wanted. That's the very setup that cracked the code for me that I figured out, okay, when that forms, I know that's the day that this fucker is going to make the low right there in that fair value gap, which I didn't call it a fair value gap then, but it traded down into that. That would be my initiation to go in long, because what is it doing? It's knocking out stops. It's taking out a support level, and it's going into an inefficiency. So that's where it's going to go. So if I can get my order in to buy as it drops down there in a time when I think the weekly chart's going to go up, what am I doing? I'm buying below the opening price. What opening price, ICT? I know some of you are like, you keep talking about the opening price. What the fuck opening price you talking about? Well, if I'm going to be up in the morning session trading the 9:30 opening, or if it was, the bond where I was trading the bonds prior to equities opening, it's the opening price at the open outcry pit at the time, because back when I was trading in the 90s, we didn't have electronic trading. It was open outcry. So there was a whole lot of horse shit of calling the broker, and you heard all that stuff before. And the whole time the market's moving around. So you have to use limit orders. To trade like this, you had to have your limit orders resting in the marketplace, because you can't call up and do a market order. The shit's already gone, right? So what I discovered was that when the market would create these buying below the opening conditions, which were highly primed to go up, I was in an area where I felt very, what's the word I'm looking for here? Powered. Because it was repeating a lot. And I knew I had something, and I wanted to still go back in and ring in the stochastic, because it wasn't on my chart. And I felt like it would make it better if I did this. So I put the 10 period stochastic on an hourly chart back on my chart, and use the same logic. It has to be oversold, and then once it becomes oversold, does that same idea of the opening price see that drop down, and the whole aspect of a Judas goat in the mind. Like, if you've ever raised animals or whatnot, if it's usually like pigs and goat, sheep, they employ a goat that's called a Judas, and it walks the livestock up to the slaughterhouse, but it takes a small little detour. It takes one little exit that the other ones won't. So it gets to be safe from the slaughterhouse, but it leads all the ones to slaughter. That initial drop down when the market's predisposed to go up, that's what I dubbed it as a Judas swing. Now, it led me astray many times when I was trying to be a short seller, because I was so excited about learning how to do short selling. I even got caught up in many times a Judas swing. So I had to relearn a lot of things and get my mindset corrected from those things, because I was chasing something new, shiny new object syndrome. So I abandoned what I had already learned by what I just told you here.
Yeah.